Why is real estate better than mutual funds? Mutual funds are the default option for most investors, but is it really the best option? In this video, I'll show you why real estate outperforms mutual funds in all the metrics that matter. Wall Street wants you to believe that mutual funds are the safest path to wealth. But if you're serious about building long-term wealth and cash flow, real estate could be a better play. If you've been parking your money in mutual funds for the last 2 decades and you're not satisfied with the results, I'm going to break down why real estate is a better option than mutual funds for short-term and long-term investing. So by the end of this video, you'll understand why real estate is better for producing income, tax advantages, and long-term stability over mutual funds. So take a look. My name's Jeremiah Boucher. I've been in real estate investing for 20 years. I'm probably biased on this video, so take it for what it's worth. I'm not a wealth advisor. I'm a real estate investor. I raise funds and buy commercial real estate around the country. So the first reason why I believe real estate is better than mutual funds is real estate produces consistent cash flow. Mutual funds may grow over time, but they traditionally don't pay you a large dividend or cash flow yield. Many times under 1%, 2%, 3%. Rental real estate creates rental income consistently. This is what you can live on, what you can eat. These are distributions that consistently occur if you buy the right type of residential or commercial real estate. And when I say real estate, I don't mean you need to be the one that's always in control or taking on the liability. You're able to invest in partnerships or funds where you take a limited position and still get to participate in the cash flow and upside. I'm sure you've heard this before, but I'm still old school with this belief system where real estate has hard, tangible value. It is a real asset. People need it. Land, they're not making more of it, right? Real estate has a business use. You can see it, you can touch it, you can improve it. Unlike mutual funds, real estate returns are not subject to market volatility. If the stock market goes up, there's very little correlation with real estate property that you own and the values going down. And my belief is physical assets tend to grow in value and inflate in value over time versus equity assets or shares in a company or in a mutual fund. Next, leverage. Leverage is a double-edged sword. It can burn you or it can build you. And real estate, you're able to leverage properties. And if you do it responsibly, you get debt, you can accelerate and outpace returns that mutual funds can achieve. For the most part, mutual fund shares can't be levered, and your risk is to the market exposure. If the stock market goes down, you will lose money or your value of your shares will decrease. Real estate comes with massive tax advantages. Mutual funds don't. So I'm going to compare real estate versus mutual funds with the tax advantages. Number one, depreciation. Real estate investments use depreciation to help defer taxes. In mutual funds, there is no depreciation that flows to the investor. Number two, a 1031 tax-deferred exchange. In real estate, you can use a 1031 exchange. And in future videos, I will share the nuances of a 1031 exchange, but they essentially allow you to defer your profits when you sell a property and tax-free or tax-deferred, move those profits into the next investment, helping compound your wealth. In a mutual fund, you cannot utilize a 1031 exchange. And when you sell, there are no tax benefits. You will have to pick up the gains. Next is a cost segregation study. In real estate, you can accelerate the depreciation and utilize or maximize your passive losses. In mutual funds, you cannot get a cost segregation or utilize depreciation at all. Investing through your IRA or your self-directed IRA, you can invest in real estate and defer taxes and compound wealth, and you can do that in mutual funds as well. The fundamental point I wanted to make here is real estate is tax advantaged and you can grow your wealth compounding it without diluting your returns each year by paying taxes. With mutual funds, there are very little to no tax advantages available. The next point is you have a level of control. Yes, it is more work, but real estate, you can influence and control the outcome. In mutual funds, it is a casino. You have no control over the outcome of putting your money into a mutual fund share and hoping or influencing that the market will go up and down. In real estate, you choose the market you invest in. Just because the national economy is in a recession doesn't mean the market you invest in will go down. There are markets that perform well in recessions and assets in real estate that perform well in recessions regardless of what's going on in the national economy. Self-storage and manufactured housing, mobile home parks, These two asset classes I invest in perform very well in a down market, especially when the stock market's declining. Next, you can negotiate the purchase. And this is the inefficiency of the market of real estate, where it's not on a public exchange, so that you can find mispriced assets and good opportunities in real estate that are under market, where in mutual funds, there's very few, if any, mispriced opportunities, and you're paying the market price on the stock exchange. You can influence the asset in real estate by making physical improvements and improving the management, the customer's experience, or the tenant's experience. In mutual funds, you have no control over how those businesses are ran or how profits are distributed. So with real estate, you just don't take a ride on the market. You influence the outcome. The odds and deck is stacked in your favor if you do real estate investing the right way. I may get flack on this, but I believe real estate outperforms mutual funds any day of the week. It is by far the superior asset class and offers so many advantages to investors. If you're looking for equity growth, cash flow, control over the investment, utilizing leverage and long-term appreciation and depreciation tax benefits with outpacing inflation and continually increasing the value of appreciation over time, real estate is a much better choice than mutual funds. And mutual funds are dependent on the market growth. There's lots of fees and there is volatility. You have no control over the asset. You have no control over the profits that are being distributed. So everyone can choose their own wealth path. Real estate does require active participation in at least analyzing the partnerships you invest in, analyzing funds that you invest in, or analyzing the properties that you invest in, and getting out there and managing them. If you're an active investor, yes, there's a price to pay, yet all these benefits are worth the price if you're willing to put in the work. Yet mutual funds do come easy. You can open up a brokerage account with E-Trade or Charles Schwab. You can buy any mutual fund that you want, and then you are taking the ride and hoping that the market does what it does. But for me, long term, I like to have control. I like to have the odds stacked in my favor. I like to be able to know that I have a tangible, solid asset that's going to be in use for a long, long time into the future instead of a share in a company that who knows what it's going to do. You as an investor make your own decisions. Is the price worth the payment of energy, time, and focus to have these benefits of investing versus passively investing with a wealth manager or buying shares in a mutual fund? That's up to you. But now that you know the benefits of commercial real estate, check out the next video where I talk about how to analyze properties, how to run the numbers, and what are the best commercial real estate investments that you can find. And then how do you actually get into the game and start buying them? Thanks.